Thank you for joining me. I'm Alex, and I want to talk about MGM today. And there's a few sectors that I know quite a bit about, and one is retail, and one is casinos. So I really like doing these videos about casinos. It's just that I haven't really done one yet. But I've been asked to do MGM specifically, and I want to do Win and some others, because obviously there's a sale going on, and the discounts are ridiculous right now. Now, I do want to say that we haven't hit the bottom yet in terms of things getting shut down. And apparently, basically, Las Vegas just closed, which means that all the casinos in Las Vegas are closed for the foreseeable future, which is something that's unprecedented and that I didn't really expect. Now, obviously in casinos, people are not packed that tightly, usually. Obviously, there's also shows going on and everything where people are packed quite tightly. But overall, I didn't think it was this much of a problem that such drastic measures had to be taken. So things haven't quite hit the bottom yet. The question is whether or not that's priced in, and the question is whether or not people are overreacting. And I assume, because of the discounts being as steep as they are, that people are overreacting quite a bit. And there's always going to be people that can afford to go and that have the money to spend. So casinos are one of those that will survive, probably. I mean, there's been quite a few downturns in even recent history, and casinos don't tend to go broke. So what they do is, obviously, casinos. That's kind of why I've been talking about it for, feels like, the past half hour. Current price is $7.14, which is down 25% on the day. And a fairly recent high was $37 or $35 or something like that. So they have quite literally lost 80% of their value in just over a month, I think. And I think that is a bit of an overreaction, to make an understatement. So current market cap is $3.5 billion, which obviously you couldn't build the casinos for. Now, dividend yield 8.5% ish. I don't know what's wrong with the finance sites. It seems like they can't quite compute all the values depending on the extreme volatility that we're seeing. So the dividend is 60 cents. The price is $7.14. So it's about 1/12. And so, payout ratio was 13.4%. Obviously, it would really be nice if we could look into the future and see what their earnings are next year, but no such luck. Revenue $12.9 billion, up 8%-ish. Earnings $2 billion, up 300%-ish. Obviously, fairly meaningless numbers because we're looking forward, not backward. PE of currently 2, which is quite insane. Forward PE of 8-ish. So current PE is listed as under 2, which is quite ridiculous for pretty much any business. The problem is obviously that we cannot look into the future, and the future earnings are much more important than the past earnings. So overall, take that with a grain of salt. But I would expect that if the economy bounces back at a reasonable pace in a reasonable time, that PE kind of sort of holds true. I would expect the earnings to go down slightly, not significantly. Obviously, we don't know how long the situation is going to last, and if it lasts quite long, there will be problems, obviously. Total assets, $33.8 billion. Total liabilities, $21.2 billion. And the thing that I've been seeing a lot lately is total stockholders' equity of $7.7 billion, or more than twice the market cap. Now, obviously, a business like MGM Grand, even if they were to have big trouble making payroll and paying their bills and everything, they could be borrowing quite a bit of money, and they could currently be borrowing quite a bit of money at a very low interest rate, because they have the real estate and everything that they could get loans against, and they probably don't have as much problems raising capital as other businesses. So total stockholders' equity of more than twice the market cap is always a really good sign, and I would not mind buying a little bit of MGM just for that fact alone. So overall, obviously the uncertainty is kind of the problem here, and obviously I think the uncertainty is more or less priced in. So I really don't think that this will be a bad stock unless you want to throw all your money at it. That would probably be a bad idea. There is a big amount of risk involved, but I also think that the reward is quite significant. So for a growth investor, I don't think this is the kind of growth you're looking for, and I think there's better opportunities out there. So I think you're going to be out. For a dividend investor, the dividend yield is quite nice, even at this time where a lot of stocks dropped 30%, 50%. 8.5% is nice. The payout ratio, we can't look into the future, but I would think that when things get back to normal, the payout ratio probably goes towards maybe 30% at the worst. And so a dividend yield of 8.5% with a payout ratio of 30% would be quite nice. So I would probably diversify into that a little bit, but not open a huge position because of the risks involved and because the current situation is nowhere near over and we don't really know what's happening. But I think it's worth it to open a small position here. And the same goes for a value investor. I think a value investor will find that the balance sheet looks pretty nice. The stockholders' equity being twice the market cap is obviously pretty nice. The dividend yield is pretty nice. And so, not to mention the PE. Have to say that, not to mention the PE. Anyway, for a value investor, I think it also would be nice to kind of diversify into this stock and open a small position, because it's really hard to pass up a stock like this with PE of 2, stockholders' equity twice the market cap, decent balance sheet, growing revenue. Won't be growing next year, but obviously lots of uncertainty, lots of risk, but I really think that all of that is priced in, and this might be a really good stock to look into. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.